Good morning, everybody. It is May 25th, and we're talking about what's hot on the open here at MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. Let's jump into this grindy market. And taking a look at the Dow Jones, you can clearly see right now on the daily chart, it's basically grinding. Now, the bulls are still in control. They got over their 50 and 20-day moving averages. Again, context, folks. The bulls are in control, but they're not showing conviction. They're right above that 20-day moving average, up 5 points, basically trading at 20,944 on the index. Taking a look at the S&P 500, up $1.50. Again, grindy. You see it right here. It's just grinding right above that 20-day. So the bulls are still there, but they're lacking any conviction. The NASDAQ, similar action, grinding to the top side. So you're seeing the three large cap indices basically in bullish trends, but they're grinding. You're also seeing that the Russell 2000 is in a battle. The bulls haven't taken complete control in this small cap, domestically centric stock index, and it's up basically 53 cents. But you can see it's right in that tight 20 and 50-day moving average, folks. The battle has begun. They're going to need to catalyze. Crude oil. Crude oil is going to have, we had a draw last night from the API data of 1.5 million barrels. Now, that is a draw versus a build last week in the API, but the API is one of those fungible numbers. I really don't get how they compute it, but I watched the EIA report. That's going to be out in about an hour at 9:30 Central, 10:30 Eastern. That's going to move the crude markets. What also is going to move the crude markets is going to be this evening when the OPEC nations release their notes and what they are going to be doing going forward as far as production cuts are concerned. Are they going to extend it 6 months, 9 months? Are they going to make them deeper than the 1.8 million barrels per day? Right now, crude oil is pulled off of its best levels from overnight session and is basically trading where it's opened at right around 51.42. You're also seeing the Brent contract. This is the contract that trades primarily in the Middle East. You know, that's where it's pumped at 54.15. And the dollar. The dollar has rebounded off of its lows. Yesterday, we saw that momentum. We continue to see it today, but it's in a very tight consolidative range. That's put some pressure on other global currencies, the euro, the pound, as well as the yen. The yuan is flat as far as in China after that Moody's report that they downgraded from A1 to AA3 on concerns of both growth, and the fact is that they're also looking at the leverage that is going on both in the property markets and their concerns at Moody's as far as the leverage in the securities markets. Now, we've been talking about that for months, so Moody's a little bit behind the curve, but we're going to be keeping an eye on that. And that headline had China trading very volatilely, but they did finish the overnight session to the upside. Check out our overnight action report. Taking a look at the bonds, mixed action. The 2 years are up ever so slightly. The 10 years are trading basically flat as well, and the 30-year up ever so slightly. So you're seeing bond prices follow their brother in the over in Europe. We saw that bond prices in Europe are up to the upside. What does that mean? That means that yields are just basically staying flat to down a little bit this morning. We saw the 10-year yield last night finish the day at, and I'm going to actually bring it up right now. It finished the session yesterday at right around 2.28%. That's basically right below that 2.3%, which is that 20-day moving average. That's where the bulls need to get over. And to put this into context, we talked about this in Tech Talk yesterday. We looked at the utility markets. The XLU, which is the utility ETF, has actually been trading to the upside for the last two sessions when we're seeing markets challenging their all-time highs. That didn't make much sense. But then when you look at it from a yield perspective, the dividend on the XLU, the ETF that tracks the utility sector, it has all those high dividend paying utility stock names in it, like Duke Energy is one that we discussed yesterday. It has a 3.5% yield on it. Compared to the 10-year at 2.28, you got 1.2% more yield than the XLU. Okay, yes, you have the price risk, but you have equally as amount of price risk in the 10-year. So the fact being is that the yield bugs and yield hounds are looking at sectors that could be beneficial for that portion of their portfolio versus having the price risk in the treasury markets. And we saw that activity actually playing out. That's interesting. That might actually shift my positioning approach in the bonds as far as going forward. Taking a look at some names that I wanted to talk about post earnings. We talked about in Tech Talk last night some names. Intuit being one of them is now trading up 6.15%. That's good for $7.94 to the upside at 137.09. Stock had great earnings. Just really blew it to the upside. It's trading now at highs that we haven't. I think this might be an all-time high for Intuit. I'm just looking at this. As a matter of fact, if I go back and bring up a monthly chart, I just want to get some context here. Yeah, we're seeing Intuit trading at all-time highs today after what has been a very solid earnings announcement. We're also seeing TGI, Triumph Group. This is an aerospace and defense name. Remember, we had the White House budget come out yesterday. They're going to put a big chunk of that budget towards defense. This is very interesting. We're watching those defense names, those aerospace names that we talked about originally during the election as far as that would be beneficial to the Trump policies. We're starting to see those now laid out, and we'll see if that budget actually gets through. But Triumph, after earnings, was up. TGI up 765. That's good for 31% to the upside, folks. Just a huge blow. It went right through its 20 and 50-day moving average on the open as well as 200-day. So we have both the short, intermediate, and long-term traders now in the green. If they had purchased over the last 20, 50, and 200 days, we're starting to see those traders see the benefit of the earnings. Now, Tiffany's not so much a recipient of good news on the earnings front. Tiffany's came out, earnings disappointed. Stock's down 8.76%. We've seen that luxury makers, we saw this happening last week with Louis Vuitton and some other luxury makers, especially with the fact that we see that there's a bit of a slowdown in China and concerns there of a potential slowdown. That has put some luxury names on notice. We saw that it had challenged its 20 and 50-day moving average a couple weeks ago, basically over the last couple of months. And it looks like they were going to break out in advance of earnings. Well, this morning, boom, Tiffany down 8.25 at 84.89. The bulls are clearly knocked on their butts after that one. Taking a look at Lowe's. Now, Lowe's actually finished down 348 so far after earnings. That's good for 4% to the downside at 78.86. Disappointing earnings. Now, they have some interesting components that are coming out. They're enhancing. They're going to increase the number of stores out there by 35. But again, the bottom line was disappointing. And you had existing home sales basically in line this morning. So you thought there was a couple catalysts, but the earnings just did not impress. Profit taking happening. The bulls are clearly in trouble in Lowe's. We're going to see how this ends up for the remainder of the day. Looking at Advanced Auto Parts, they also disappointed, but this one was pretty much so telegraphed because we saw that AutoZone had reported. They disappointed and they were down huge. We see that Advanced Auto Parts, AAP, is down 6%. That's good for $8.60 to the downside at 132. Clearly, we saw, even in advance of earnings, that the stock was in trouble. It broke through its 20-day moving average before the announcement this morning, and it broke through and is now trading well below its 20 and 50-day moving average as well. It's below. It's been in a bearish trend for basically the last couple months. Really now some profit taking, and that's ramped up. Finally, we want to take a look at some semiconductors. NVIDIA, the darling, up another $2.98. That's good for 2.17%. Looks like SoftBank has revealed that they made about $4 billion investment in the chip darling. Thing just keeps on making new highs. This has brought up some of its brother, and initially AMD had some upside. It's actually pulling back some profit taking. The bears are clearly in control in AMD versus what you see in NVIDIA. How do I say that? Well, look at the 20 and 50-day moving average for NVIDIA and look at it for AMD. And AMD, it's acting as a resistance point, both on the 20 and 50-day. The bears are in control. Even though the semiconductors have been moving to the upside. They're being challenged. NVIDIA being the darling isn't challenged right now, but the sector in general may be up for a fight. Let's see if this starts impacting NVIDIA shareholders, especially the short-term ones that have seen enormous upside in a very short period of time. All right, folks, that is it for what's hot on the open. Join me at 1:30 Eastern Time, 12:30 Central Time for Strategy Now. I'm going to be talking about some really cool strategies that you could start implementing in this market. See you then here at MarketStream.live.